Donald Trump is currently crashing the Bitcoin price and the overall markets again, because the threatened tariffs against China are now coming into effect. Specifically, it is said to be at 12 p.m. Eastern Time. Additional tariffs of 104% on China are supposed to come into effect because China has not lifted its 34% tariffs on the USA. There was initially fake news from Fox News that this was supposed to happen today. But no, we now have confirmation that these tariffs will come into effect tomorrow. So, they are already official, but tomorrow is when they will start being taxed or tariffed, or however you want to say it. This is now leading to a significant sell-off. But I warned you, I made the video just yesterday. You have exactly 24 hours until the next crash. And that's exactly what's happening now, that this announcement is causing a setback for Bitcoin, but also for the overall markets. There's no need to panic now. It will eventually rebound. I also don't know how far it will go down, or how seriously the market will assess this. By now, the market also knows that things are very, very volatile at the moment, so there's no need to panic now. But now let's take a closer look at what exactly is going on, and what it means for Bitcoin. Later, we also have a report from Bernstein, which addresses how Bitcoin is holding up relatively well in this crash, volatility, and uncertainty. And they even give Bitcoin props here, saying, hey, Bitcoin is doing very, very well at the moment, which we will also take a look at. China has also said they will fight until the end. So I'm not sure if they might back down here, because it could be that if the tariffs come into effect, they might relent. Peter Schiff had a very, very good assessment of the current events. Even though he often misses the mark with Bitcoin, he has always had a very, very good handle on the overall markets. He said that China can pull the rug out from under the US economy at any time. There is no reason to respond with tariffs that harm China itself. As our largest supplier and one of our biggest creditors, a financial crisis would be a devastating blow if China really wanted to harm us. So, he simply means that China doesn't need to lower tariffs, because the USA is dependent on China. At least, that's the view of Peter Schiff. Johanna Koda also very aptly points out that it feels like every product you pick up in the USA comes from China itself. Indian souvenirs, US flags, and Trump shirts. Will be interesting to see where all this ends. So once again, a very critical assessment that the USA is not as independent as it often portrays itself to be. Earlier, I made a video where I discussed how China is now trying to fight against the USA. They are doing this by selling government bonds and devaluing their own currency. You are welcome to watch the entire video, where I explain in detail why this is also positive for Bitcoin in the long term, and how Bitcoin can benefit from it, even though in the short term, all these tariff measures are initially causing a lot of uncertainty. And this uncertainty leads to sell-offs, and only when more stability returns to the market will we likely see a rebound. Or if people realize, okay, it's not that bad after all, then the market will likely rebound here as well. I'm looking at the chart the whole time. When I started the video, we were at 77,500, and now we're already at 77,000. And it could be that by the time the video ends, we're already at 76,000 or something like that. I'm really curious to see how much further it will go down, and how seriously the market assesses this. But there was also an interesting assessment from the Crypto Caesar David Sachs, who wrote about this just before the market crashed. Trump Crypto Caesar here says, the Black Monday scam is over, we're back on track. So, we saw that Bitcoin was performing quite well today, up until now. Then the news came. So yes, Bitcoin was doing quite well, but that wasn't actually the case. The timing wasn't the best, because Bitcoin is now being sold off again in the short term. But we must always say that in the long term, nothing has changed here. Regarding the investment thesis, in the long term, everything still looks very, very good for Bitcoin. And we'll take a look at that now, why Bernstein is so positive about Bitcoin, why Bernstein is so bullish on Bitcoin, even though we are experiencing a short-term sell-off right now. The major asset manager Bernstein has now responded to the current uncertainty in the market, especially regarding Bitcoin uncertainty. And they say here, the 26% decline in Bitcoin during the recent chaos is small compared to previous drops of 50 to 70% and indicates stronger demand. It must also be said that 30% declines in bull markets are simply normal. And here they simply say, okay, in the past there wasn't such a large holder base. This is also what I've partially explained to you in the last videos, that Bitcoin simply cannot fall infinitely downward because there is a certain holder base that will never sell. Feel free to comment below, write in the comments, who among you would never sell Bitcoin. And that's why maybe only 10% of the supply is actually liquid, that is, potentially, available for sale. I mean, there are never exact numbers on how many potential sales are actually in the market, but it's certainly not 100%. That's why theories from Peter Schiff that Bitcoin can crash to the ground, or from the European Central Bank, that's all nonsense because maybe only 10% of the capital in Bitcoin is even potentially available for sale. And sure, they sell. And then there's a 20 to 30% drop. And that's the difference that Bernstein recognizes. compared to earlier setbacks, where you could easily have a 50 to 70% drop. They continue here and say that Chinese tariffs harm the miners, but US alternatives and AI possibilities offer support. They definitely believe that here, the miners can be harmed. I'm not sure now whether they mean the Chinese miners or the American miners. So, from how it sounds here, they seem to mean the Chinese miners. But actually, that would make less sense. It's likely that the American miners are almost more harmed here, because the American miners have to import the Chinese mining machines from China. And if there are tariffs now, then it could be that the Chinese mining equipment in the USA become more expensive. That means, theoretically, the Chinese mining industry would be strengthened here. That's also what Peter just said, that we are somewhat dependent on China because we import a lot. Or rather, the USA does. And in the mining business, that's definitely the case. Many people criticize that there is a centralization, that all the mining equipment comes from China. And yes, that's definitely a problem that Bernstein addresses here, even though I'm not entirely sure if I've interpreted it correctly, and if they exactly meant this problem here. In any case, they continue writing. Bitcoin continues to behave like tech stocks, not like gold, but functions as a liquid risk asset after the stock market closes. So, that's something we've seen quite often. For example, there are crises, or we've also seen it now, Saturday and Sunday. What happened? The stock markets were closed. Sure, the futures crashed down. And then Bitcoin also crashed down pre-market, because it was the only thing that could be traded somehow. All other assets couldn't be traded. This has happened before, like when there was a rocket attack, I believe, in Israel or something like that, where then, also, overnight, on a Sunday or Saturday or so over the weekend, the prices massively crashed down. We've had such situations repeatedly, and in the regular stock markets, the values often crash only when the stock markets reopen, and often, by then, everything has already settled down a bit, and so on. This means Bitcoin always gets the direct response from the market. This means that there is uncertainty. It's not with a delay, but rather you sell off your Bitcoin directly. Some people think that's bad, but many also say it's good because the great thing is that Bitcoin has such incredible liquidity, unlike Christine Lagarde, who says you can't rely on Bitcoin because the liquidity is too low, which makes no sense at all. Bitcoin is highly liquid here, especially on trading days when the regular stock exchanges are not open. In any case, moving on, Bitcoin does not function like gold. We can clearly see that Bitcoin does not yet function like gold here. However, it could become that in the long term, because Bitcoin actually has all the properties of gold, plus many other good qualities. In my opinion, Bitcoin is the optimal risk-free asset, the optimal safe haven, as seen by people like Larry Fink, Michael Saylor, or Nick Haddywood. Then it is said here that in the long term, a more volatile, more liquid version of gold, around $2 trillion US, compared to the $20 trillion US gold market, is indeed possible. That's simply how they see it here. Bitcoin does have certain similarities here, though some things differ. And, yes, in the long term, it could potentially align itself with gold. Institutional acceptance through ETFs and corporate bonds, around 10% of the supply, has made Bitcoin more stable. Despite a 15% decline since the beginning of the year, ETF inflows remain positive. The selling pressure mainly comes from short-term traders, while my thanks to AI deals are minimal. That debts remain high. So, this is definitely a very, very strong assessment that they also say, okay, the ETFs have led to Bitcoin being further strengthened, not weakened, and they also focus on the weakened. That's also what I always say, hey folks, you don't want to be among the weakens, because often we've seen that especially in this pullback, the people who sold were those who might have entered at 105,000, at 100,000, 110,000 or something like that. They sold and then ended up with a very, very bad deal, and now they're probably whining, and so on. But that's just the thing. You simply have to understand Bitcoin and view it in the long term, not the short term. Now, a few people have also asked me, why isn't MicroStrategy buying more now? They could buy a lot more now if the price is dropping like this. So why aren't they buying? Yes, Michael Saylor has a certain problem here. He could raise capital most easily when the Bitcoin price goes up. That means, actually, Michael Saylor has to buy especially at the peaks, because when there's euphoria, when the Bitcoin price goes up, he can gather capital much more easily, because he's not really buying Bitcoin with his own money, but rather he's doing it through various methods, like Strive, Strike, convertible bonds, and so on, using borrowed capital. He has different ways to accumulate Bitcoin, but they are always vehicles where he essentially gathers money based on an investment thesis. He collects funds, and it's not really his own, using his own money. I just noticed that while we are recording this video, the S&P 500 is also in a steep dive. We're seeing losses of 2.3 trillion here in the last 3 hours. So, the S&P 500 was doing quite well. Here, 4.5% gain here, basically ruined now. So we can already see that. Everything is currently just dependent on Donald Trump. Of course, also on China. They're somehow the key players right now. I know, it sometimes hurts. And it's sometimes annoying to watch everything go up and down and so on. I think it's cool It brings action. I always find volatility exciting. It somehow brings life into it. That's also what Michael Saylor says. Volatility is vitality, meaning it's liveliness. Anything that isn't volatile is dead. Like all the fiat currencies, where there's essentially a forced effort to remove volatility. If you still want to buy Bitcoin, I'll put a link below for you. 21 Bitcoin, how you can easily and securely buy this dip. With the code, you can get up to 20% off the fees when buying Bitcoin. Here you can easily and securely buy every dip super easy. Guys, see you. Peace out.